Ethereum, the world's second-largest cryptocurrency, is at a crossroads. After reaching all-time highs in late 2021, its price has stagnated, leaving many to wonder about its future. Is this a temporary setback, or are we witnessing the decline of a once-dominant force in the crypto world? The answer, as always, is complex, and requires a deep dive into the factors shaping Ethereum's trajectory. The crypto community is abuzz with speculation. Some remain optimistic, pointing to Ethereum's strong fundamentals and ongoing development. Others are more cautious, expressing concerns about scalability issues, rising competition, and the impact of macroeconomic headwinds. One thing is certain, Ethereum's future remains uncertain. The coming months and years will be critical in determining whether it can reclaim its throne or fade into obscurity. Join us as we explore the forces shaping Ethereum's destiny and attempt to answer the burning question, is Ethereum's reign truly over? To understand Ethereum's current predicament, it's helpful to compare its performance to that of Bitcoin, the undisputed king of crypto. While Bitcoin has experienced its fair share of volatility, it has consistently outperformed Ethereum in recent months. Bitcoin's resilience can be attributed to several factors. First, its status as a store of value has been reinforced by geopolitical uncertainty and inflationary pressures. Second, its limited supply and predictable issuance schedule make it an attractive hedge against inflation. Third, Bitcoin has benefited from growing institutional adoption, with major players like Tesla and MicroStrategy adding it to their balance sheets. Ethereum, on the other hand, has struggled to gain similar traction. Its narrative as a world computer powering decentralized applications and smart contracts has been overshadowed by scalability issues and high transaction fees. While these issues are being addressed through ongoing development and the implementation of Layer 2 solutions, they have nevertheless hampered Ethereum's growth. Ethereum's scalability woes have led to the emergence of Layer 2 solutions, which aim to increase transaction throughput and reduce fees. While these solutions hold immense promise, they have also resulted in fragmentation within the Ethereum ecosystem. Instead of a unified Layer 2 landscape, we now have a multitude of competing solutions, each with its own strengths and weaknesses. This fragmentation creates complexity for users and developers, who must navigate a fragmented ecosystem and choose between different solutions. While Layer 2 solutions are crucial for Ethereum's long-term scalability, their current fragmentation poses a challenge. A more unified and interoperable Layer 2 ecosystem would undoubtedly benefit Ethereum and its users. The rise of the challengers. Can ETH killers dethrone the king? Adding to Ethereum's woes is the rise of so-called ETH killers, blockchain platforms that aim to unseat Ethereum as the dominant platform for decentralized applications and smart contracts. These challengers often boast faster transaction speeds, lower fees, and novel features that Ethereum currently lacks. Solana and BNB Chain are two prime examples of ETH killers that have gained significant traction. Solana has attracted developers and users with its high-speed network and low transaction fees, while BNB Chain has benefited from its association with Binance, the world's largest cryptocurrency exchange. While Ethereum still holds a significant first-mover advantage, it cannot afford to rest on its laurels. The competition is fierce, and Ethereum must continue to innovate and evolve to maintain its position as the leading platform for decentralized applications. The macroeconomic headwinds, interest rates, and institutional appetite. Ethereum's struggles are not solely due to internal factors. The broader macroeconomic environment has also played a role in its underperformance. Rising interest rates and soaring inflation have dampened investor sentiment across all asset classes, including cryptocurrencies. As central banks around the world raise interest rates to combat inflation, investors are increasingly turning to traditional safe haven assets like U.S. bonds, which now offer attractive yields. This shift in investor appetite has reduced the flow of funds into riskier assets like cryptocurrencies, including Ethereum. Furthermore, institutional investors who were once seen as a major driver of crypto adoption have become more cautious in the current macroeconomic climate. The prospect of a recession and continued market volatility has led many institutions to scale back their crypto investments.